Today is Monday, April 24th, and this is the ADM Investor Services weekly market kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the financial markets this morning, Alan, what are the most important economic reports scheduled for this week?
Okay, well, we do have a few reports early in the week, but really not those that are market moving until Wednesday. That's when we'll have the March durable goods guessed at up 0.9%. Thursday, we'll have the first quarter GDP guessed at up 2%. And then on Friday, we'll have the March personal income anticipated to be up 0.2%. Personal consumption expenditures, and that's the one the Fed tends to pay a lot of attention to, that's expected to be unchanged. And also on Friday, the April Consumer Sentiment Index guessed at 63.5.
And we have another Fed policy meeting on May 3rd that's coming up about a week and a half from now. What will the Fed do at that meeting?
So it is widely anticipated that the Fed at the May 3rd meeting will hike by 25 basis points. That would take their Fed funds rate to 5 to 5.25. I think, though, at subsequent meetings, the next two meetings or so, they'll probably keep that rate unchanged. But the Fed could actually be cutting rates in the fourth quarter of this year with additional rate cuts in the first quarter of next year. So probably one more rate hike, a period of no change, and then actually easier credit at the end of the year.
Lastly, Alan, what's the near-term price outlook for stock index futures and the interest rate futures markets?
Okay, so for the near term, with so many analysts anticipating a Fed rate increase coming up at the beginning of May, I think stock index futures will probably trade sideways. I think traders will probably not want to be too bullish or too long ahead of the very likely hike in rates. But I think once the meeting is out of the way, I think stock index futures will probably tend to trade higher. Also, it appears that the interest rate futures markets will continue to advance after lows were made several months ago. Also, we did have a double bottom pattern in the June 30-year Treasury bond futures that apparently is a false sell signal. That double bottom was penetrated last Wednesday, and now futures are higher. So I think higher across the board in the interest rate futures markets. And one more, I think the dollar index will probably continue to weaken, and the euro currency will continue to advance as interest rate differentials continue to favor the euro over the U.S. dollar.
Thank you, Alan. Mark, looking at the ags, what factors will drive agricultural markets this week?
Well, the next USDA report is nearly 3 weeks from now, so prices this week, I think, are going to be sensitive to demand developments. Weak export sales last week contributed to a late week sell-off. This morning, we saw cancellations of 327,000 tons of corn to China. In addition, ethanol demand has not been quite up to the pace it needs to be at to reach the current USDA forecast. In soybeans, last week's NOPA crush report was strong. However, it's going to continue to gain. It's going to need to continue on gain on year-ago pace just to reach the USDA forecast, and doing so in an environment where crush margins continue to decline. This afternoon, I look for crop progress to show about 20% of the corn crop planted, about 10% of the soybeans. Also in soybeans last week, we saw a negative reaction to just continued reports of beans being imported into the U.S. From Brazil. The price gap between our two countries has been over $2 a bushel. So these imports are going to do one of two things. Either one, they're going to narrow that gap, or two, it's just going to encourage additional imports down the road. In the wheat, we're likely to see further declines in crop ratings this afternoon. It'll probably be weeks before we know the true impact of this weekend's freeze on the winter wheat crop. We still do have good rains in the forecast for later this week. It's now going to be a question of, is it too little too late to help salvage this year's crop? And of course, finally, we're also going to be monitoring the situation with the Black Sea grain corridor as Russia continues to threaten not allowing the safe passage of Ukrainian shipments here when the current deal expires here in mid-May, and the Russian foreign minister is going to be in New York today to discuss that with the UN ambassador.
Mark, looking specifically at corn, what's the near-term price outlook?
I've been suggesting the 645, 695 range for the May contract range. I feel pretty confident in. However, we're going to need to see a pickup in demand to avoid violating the downside of that. May continues to gain on the July despite the suspect demand. This is largely due to strong basis. The July contract continues to be hammered by the second harvest of Brazil just months from now. Another thing to also consider, the month of May has been rather negative for corn prices the last 2 years. After peaking in late April or early May, prices have broke between $1 and $1.30, bottoming out in either very late May or early part of July. I don't think we're as vulnerable to that type of trade action this year. In the past 2 years, money managers have been very heavily long corn this time of year. Right now, they're only long about 40 to 50,000 contracts.
And lastly, Mark, specifically for soybeans, what's the near-term price outlook there?
Similar mindset there. I've been suggesting a 1475 to 1545 range for the spot in May. Nearby futures have rebounded this morning despite the reports of the additional imports. Prices are once again challenging the $15 level and also some key moving average resistance. Brazilian harvest has reached 92%, so I think we're going to start to see some relief from the historically weak basis we've seen from Brazil, and that's something that's also going to give a boost to U.S. values as well.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.